first rates, any sector now. It's a Monday morning. It's going to be a very dry open, and it is indeed a dry open. Even Steven in terms of market breadth. Bank Nifty not headed anywhere. Mid cap index down by about 0.25%. You got the small cap index, which again is just not going anywhere. So markets are just laboring here. They are just not showing you any signs of directional, and if at all, the bias is actually on the downside. Paytm and Bharti Airtel, yes, no, yes, no. Economic Times today is saying that look, there is no talk. But Paytm, believe it or not, is at 646 rupees. Policy Bazaar, in a sense, was the star and has been the star outperforming stock, but today it is correcting. The force of gravity, I think, now is kicked in for a stock like Policy Bazaar. Zomato, well, the interview in less than 15 minutes now, ahead of, there's no news, but 54.5 rupees for Zomato. And then you got Cipla, Britannia, Nestle, the typical consumer names which are making a comeback when the market picture, in a sense, is slightly uncertain.
Okay, a couple of other names. Interglobe Aviation, that's one in focus. Over 50 planes of the company and Go First have been grounded because of engine woes. That's what reports of the weekend seem to be indicating. And we've seen that there have been quite a bit of technical snags with most of these aircraft. Paytm and Bharti, of course, are the ones in focus, but still reports are unconfirmed because Paytm, news reports seem to be indicating, saying that they have no such discussions with Bharti. So let's see what really comes about from this story. That's Paytm, of course, holding up 3.5%, but let's see what Bharti also may be up to. Still unknown whether the talks, when they happen, whether they happen in the personal capacity or within the listed entity, Bharti Airtel. So it's pretty much a lot of, grey out there right now. IRB Infra, they've got a letter of award for a project worth a sizable 2,132 crore rupees. IRB Infra now holding up 2.25% up in the green right now. Dilip Buildcon as well bagged projects worth about 3,600 crore rupees. Talk about the infra boom. Most of these companies getting orders on a daily basis, literally. Then, of course, there is Dr. Reddy's as well, and wires seem to be indicating that Main Pharma has sold US retail generics business to Dr. Reddy's for about $90 million. So you're not really seeing much of a reaction come by. Adani Ports, they've crossed 300 MMT of cargo volumes in 329 days versus 354 days, which was clocked last year. Adani Ports has been one of the stocks which has seen a mild bit of recovery as opposed to the kind of volatility and weakness that you continue to see in the other Adani Group names. So that stock holding out marginally in the green as we speak right now. Tube Investments looking to raise 3,000 crore rupees by March 2024. They're looking at expanding their EV business. There's Pfizer as well, which has completed the sale of their Thane business for a valuation of 178 odd crore rupees. And then Lemon Tree, a small bit of news, but they've gotten into a license agreement for a 110-room property in Kasauli in Himachal Pradesh. So that's another stock which is in focus right now. Some of the active movers from Friday, and let's see whether the metals weakness continues or not. Remember, Friday turned out to be quite vicious for a Hindalco, for a Tata Steel, for a JSW Steel. Let's see whether there's any recovery in place in the entire metals pack. Still reeling under pressure as far as I can see on the screen. Energy, yes, has been one buoyant pocket of late. So ONGC, GAIL, etc. have been holding out quite okay. That was the case at least on Friday. Doesn't seem to be seeing any follow through right now. But for the index, we're well sub the 17,400 mark as well. We're down a good 0.5%. So not just a soft start, Kunal, but a weakish start right now.
Yeah, a weakish start. I think we've now gone below the 17,400 mark on the index, and Bank Nifty I think is now substantially below the 40,000 mark. So we'll have to wait out for a point where if there is any kind of an intraday recovery after the first hour of maybe some adjustments of portfolios. The one sector which looks very attractive on the charts is the gas stocks, and from there I think ONGC is something which I would pick up as an initial trade. The stock is already ex-dividend, I think 4+ rupees over the last 2 days. So I think looks attractive at 154 odd mark on the spot levels.
Mark Matthew joins us now. Let's take a conversation forward and understand his view of market, India and the macros. Mark, good morning. Thank you for joining us. Mark, just when it appeared that inflation or worst of the inflation print was behind us, out comes the CPI data and the consumer data, which is clearly indicating that while the economy is slowing down, both for India and for the world, the inflation is stubbornly high.
Well, the first thing I would say is that January numbers are often subject to very big downward revisions, and this year could be one of those years where, for whatever reason, the numbers do get revised down. I also think that the inflation is high, but it is slowly coming down on a year-on-year basis, and um, so I don't think it's enough to really cause the markets to collapse. But I do think it does mean that the rates are still on the uptrend. So the Fed funds rate, which is currently at 3 and 3/4, sorry, 4 and 3/4, could go to let's say 5.5. And I think that the market can live with 5.5% Fed funds rate because the economy is so strong.
Mark, but if interest rates they continue to nudge higher, it will have impact on valuations. It will have impact on how do you look at terminal value. It has got everyone thinking that if I'm getting 5.5% return in the US bond market, about 8.5% return in good Indian corporate bonds, do I really need to chance my arm by buying into equities where valuations are not exactly very cheap?
Yes, I agree. That's true. So there is now competition for returns in the government bonds, which hasn't been for many years. But I still think that, number one, in an inflationary environment, you want to own assets. And stocks are assets, or they are securities that are backed by assets. And number two, I do think that the inflation rate will moderate during the course of this year. Um, the fact that January has started higher than the market had anticipated means that the jury is out. But I don't see a big spike in commodity prices. I think that the housing component of the inflation indices will start to decelerate because we can see the real time data in the housing market has been softening since June last year. So I still think that we can have a decent year for the S&P, perhaps even a very good year. But we are entering into March, April, May, which is seasonally weak time of the year, and the stocks go up and down. So the fact that we're up 3.5% this year, actually, if you annualize that, it's over 20%. So we shouldn't be displeased by the performance of the S&P so far this year. But it'll be choppy. It'll be choppy, I think, until there's more certainty that inflation is on the decline.
Mark, wanted to understand how you viewed this entire Adani Group saga and whether you believe that the worst could be behind us, although the stock prices don't seem to be suggesting so. They continue to fall on a daily basis.
So short sellers, this is the way they make money, by screening vast universes of securities and trying to find anomalies in the financial statements of various companies, and then highlighting those after they've obviously gone short the securities in some way or another. And it tends to make for very, what's the right word? Emotive reporting and behavior on the part of the media and the market, because obviously the accusations are that some kind of malfeasance has occurred. And so I guess I'm just trying to paint a picture where what has happened is something that's happened in many other markets. And sometimes the accusations prove to be incorrect, and sometimes they prove to be correct, and sometimes it's inconclusive. But the market goes on. And I mean, here in Singapore, about 10 years ago, we had similar allegations made against two very large and prominent companies. And well, the Straits Times Index is still here, ticking along. The good quality companies are still doing what they're doing and producing good dividends. So I think what I'm trying to say is that this kind of thing will gradually move into, well, this particular event will move into the rear view mirror. I suspect it already has, for the broader market. and the market will begin increasingly and focusing on the economy, inflation, and things like that.
Morning. What's the sense that you're getting when it comes to IT as a sector, given what we've seen play out in the year gone by vis-a-vis the banks? What is it that you're expecting down the line over the next few years for IT?
If we look at what happened to the technology sector after the dot-com bubble burst in the year 2000, then everything went down initially. But then what you had approximately starting the year 2002 was the companies that were profitable, their share prices came back strongly. And the ones that were unprofitable, their share prices stayed down. And so just extrapolating that to today, I suspect it'll be something similar where the companies with strong cash flows and secure business models will see a share price recovery, and those that don't will not.
Mark, Indian markets have not given any returns in last 18 months, even though India in a sense has been a very promising story. Now for bull, I would say, okay, 18 months means consolidation is over, time to get ready. But for someone who's realistic, would say that, okay, a market like India is not giving any returns, is it time to move on? Which argument do you think right now deserves higher weightage?
Everything's relative, so I think 18 months on that basis, I think it's probably still an outperformer relative to the, NASDAQ. We were just talking about technology, for example, some of the big winners of the previous decade. The nature of stock investing is that there are lots of up and downs. There are also just sort of sideways dull periods too, but over the long term, you make better returns in stocks than in most other assets, and that includes in India. You would have compounded 9% return over the last 30 years if you'd been reinvesting your dividends. That's in dollars, by the way, so obviously in rupees it would have been much higher. I think the economy is in good shape. I think earnings will be strong. I see no reason why the market can't do well this year, even though it's down sort of 3%-ish so far this year. It's just the nature of the equity market that it does. It doesn't always go up in a straight line, but over time it does tend to go up. So it doesn't bother me the fact that it's been flat on an 18-month basis or that it's down a little bit so far this year.
Mark, appreciate your time. Thanks very much for joining in and sharing with us your outlook on the Indian markets. 17,420 is where we're currently at, and it's the broader markets that are underperforming today. Within the frontliners, names like Bajaj Auto, Infosys, Bharti Airtel and Tata Motors are under pressure. But time then for the Big ET Now exclusive as promised, and in our latest edition of CEO at Work, Zomato's Dipinder Goyal talks about their path to profitability, saying they're confident of growing their profits 10x in the next 5 years. They also say the company can become a $100 billion company by the year 2030. Here's that conversation.
When Zomato went public, it was like the talk of the town. It is still talk of the town. But very big fundamental change is that the stock went from 150 to 40. How did you react to it?
I actually didn't react to it. I think somebody told me, and I don't look at the stock price, by the way. So somebody told me that the stock price had gotten there, and somebody told me that the stock price had gotten there as well.
Who's this somebody?
Someone WhatsApps me, like some random person, right? And internally, we don't talk about the stock price at all. And my reaction was like, okay, this is not actually real. This doesn't make sense. And when it got to the bottom, I had the same reaction. This doesn't make sense. So I don't know what makes sense, but neither of these highs and lows.
So what makes sense according to you?
I have no idea. Somewhere in the middle. Right? But I was always like, this doesn't make sense. This doesn't make sense. So it's okay.
But
Life will catch up.
since you were amongst one of the first consumer tech company, the new tech internet company, which used the word path to profitability. It was like saying that when you were in a private arena, the rules were different. Now in the public arena, the rules are different. Has the transition from the private market to the public market forced you to start thinking about cash flows, profitability?
I would say no, because I think for the first 5-7 years of our life, we were actually profitable. In 2018, we also hit a profit. So I think whenever we have burnt money, it's mainly because the market has forced us to do it, and competition has forced us to do it, right? So there was a point in time where the competition raised $1 billion, and we had about $100 million in the bank, right? We still had to fight that much money with a lot less cash. So we've been efficient overall, I think. I mean, and profitability is also, I mean, we try to get there as soon as possible. I don't like to burn cash.
So if the stock would have been at 200 right now, your path to profitability, your commitment to what you've shared with the market would have not changed.
Would have been the same, at least for the business that the core of the business that we are in, right? So Blinkit is something new, and I think of the entire business in terms of sum of parts, right? So I don't think think of it as one large P&L. So Zomato would have made money; it would have been on the same path. Blinkit would have been on the same path, right? So maybe we would have done something else, like maybe a third bet, right? But I don't think that us taking a third bet or not taking a third bet has anything to do with the market, right? It is to do with whether we actually believe that some bet is worth taking or not.
Fair point. So let's look at the transition. The transition for Zomato from big cities to small cities. In your last quarterly numbers, you've said business is slowing down. Now Indians are eating more, we're dining out less, we're experimenting from chaat to sushis, which means we want to eat much more. Is this temporary inflation which has hit the growth of the business? Is that the reason why the business has hit a mature curve?
I don't think it has actually hit a mature curve. It was a temporary 2-3 month phase, I think, right? And we also said it in the last letter that we think that we're almost back in action in terms of growth. I think it was probably due to a lot of weddings. There was inflation as well. There was a lot of layoffs as well. So I think it's a bunch of things, just like sort of flattened us out for a bit. But yeah, but I think I mean this market should grow 10-20x over the next decade. So
Why do you think like that?
I mean, Indians, they still largely eat at home, right? So, and our like frequency here is about 3.5 times a month of ordering out or like going to a restaurant outside. And when you compare to countries like US, China, the frequency is like almost 7-8 times more. So, and the penetration, I mean, a lot less people are part of the system right now. And in the US and China, everybody orders and everybody eats out. So the number of people and the frequency at which they eat out has yet to grow. And there's a 10-20x still actually sitting out there.
Let me try and address two things here. One, the identity of the business and the commitment of the promoters. What is your vision for Zomato in 5 years? Where do you think Zomato could be? What are the business where you think you will experiment? What are the business you think you will be able to scale up multifold? And what are the businesses where you're thinking right now, should you go or should you not go?
So I'm actually not that patient as a person. So whatever question you ask of me for 5 years out, I will want to get it done in the next 2.
Okay.
Right? So I think Zomato, the core business has to be much bigger than what it is right now. And Blinkit has to get to profit, and that also has to be much bigger than what it is right now. Hyperpure is doing so well. So just these 3 businesses, if they get to 10x in terms of scale and profit, I would be happy.
Do you think they can reach that?
I mean, that's why we're betting on them and chasing them down. But
what about penetration levels? What about the fact that, you know, in major cities, ghar ka khana is convenience. But when you go outside to small cities, bahar jaake khana is a celebration. You are now moving from large cities to small cities, and there's a big change in terms of culture, in terms of variety. Could that be an impediment in terms of a future growth?
So, not. I don't think so.
देखिए वो poster भी है. Is this really the end? ऐसा तो कुछ नहीं है.
ऐसा तो कुछ नहीं. I don't think so, because even the customers who are ordering frequently in the larger cities right now, They started off with a 4 times a year use case 5 years ago, right? So everybody starts off with, okay, I'll order a cake on a birthday, or the kids go first in class, so let's order lunch, or somebody in the home falls sick who can't cook, or the maid didn't show up. So these are the use cases with which customers get onto the platform. Then the next year, okay, there is a match going on between India and Pakistan. Let's also order food, right? Hey, movie night, let's just go out and eat. Like, so that's how the frequency goes up. So the first year, customers order 4 times a year. The next year, they order 10. The next year, they order 20. The next year, they order 40, 80. Like, that's how the frequency grows. And we got a large chunk of customers right now, which are in their first year of the journey. And we're seeing the same signs. Like, I think this huge customer base will also grow up double, and we're at the start of that point right now.
एक poster दिखाता है. Just let's zoom in on this one, and I think these are designed by you, right?
Yeah, they are designed.
Okay. All of them.
All of them.
Okay. So did you come here to play it safe? What are you trying to prove here? Keep on taking experimentation risk. Keep on incubating small businesses. Try and scale them up.
I think a lot of times people inside the organization just don't take any risks, like zero risks.
Was Blinkit a risk?
Everything, I mean, Blinkit, Zomato is a risk as well, right? So, and this poster was just to remind everybody that you don't need to be averse to risk, right? So you should be taking the right amount of risk at the right time, right? So
what is your definition of right risk?
Right risk is something that you know the downside of, and you know that if this downside happens, there's a chance to it, right? Then I'll be able to manage that downside, right? So that's a right risk to me. If you take a risk which you can't handle the downside for, that's a risk you should ideally not take.
Startup promoters have this reputation that they are very maverick. They love to experiment. Some may call it risk, but that is also something which will give you the next business idea to scale up. What is true in your case? Are you a maverick? Because everybody says Dippy is a maverick.
I think it's also an image which startup founders have to portray when they start off, because that's the only way they can hire people to work with them. At the end of the day, everybody means business, right? So, and everybody wants their companies to become bigger, make a lot of money. So those common traits are for everyone, whether startup founders or everyone. Everybody is in business at the end of the day. So I think maverick is perception as well.
You like the perception?
I don't care.
So what do you really care about? You don't care about the stock price, you don't care about the perception?
I care about the work here. I actually care about our customers loving us, about our partners actually loving us, about us growing fast, about us making money, about our people here who are working their ass off, making a lot of money, right? So that's what I care about.
What about shareholders? Shareholders say, look, I want profits, I want high return ratios, I want the path of profitability to be clearly defined and to be achieved correctly. So while as an entrepreneur, as a promoter, you'll have to focus on work, you'll have to take risk, you have to keep your team motivated. That is all something you're doing fantastically well. But shareholders have a different demand list.
I think sometimes they have demands which come down to the next month, right? So that's not what I can think of or I should think of, right? So I think I have to take care of the longer term. I mean, all the returns that happen have to happen over the longer term, and I don't think I'm building it for the short term. Even for myself, I always am thinking 2
Are you
years out,
committed
5
to
years
keep
out.
your stake at 5%?
Absolutely. Why would I change?
Your anchor investors, some of them, they've been bringing the stake down, and that means from an open market stock market standpoint, there is a lot of supply coming. The fact that Ant Group has reduced their stake and they could reduce their stake more often. Have you got an understanding from them? What are they planning to do and why are they selling? If the growth is so visible and if the India appeal is so great, why would any long-term investor think about selling?
So according to me, whoever is selling, it has got nothing to do with us. The reason why they're selling is because of factors at their own end. I don't think it's got anything to do with us. So, and a lot of people are in a lot of pressure for so many things, right? So, and I think that's what's playing out. The company is doing really well, I think.
So every company follows a curve. The ideation or incubation, then there is the youth and the vibrant phase, then there is maturity, and then there is decline. So if you have to really chart Zomato in that
Phase
curve,
1, 2, 3, 4.
yes.
Okay.
Where do you think Zomato currently is?
I think the organization is trying to move into phase 3. Which one is that?
Phase 3 essentially is you've reached
Maturity.
Yeah, maturity.
And
Maturity and high growth.
maturity and high growth.
Stable growth.
Stable growth. I think, yeah, in that case, we are in we're part of somewhere in 3 and 2, right? Youth, and we're trying to move fast, we're trying to do new things. And we're also trying to balance being stable and having predictable cash flow and so on and so on. So we're trying to do a 2 and 3, right? And just going to be very, very, I'm going to work very, very hard that we don't get into phase 4.
Only,
The paranoids survive.
are you paranoid at times when the targets are not met?
I think the word means so many different things to so many folks, right? So,
Okay. Now I've been told that this is your workstation. There's no secrecy, there is no closed cabin.
yeah,
Everybody can hear what you talk.
I don't talk usually.
Is that the startup culture? Is that the new India where it's all about co-working together? It's about approachability. Anybody can walk up to you and say hello. Are you approachable as a boss?
I don't know, you should ask everybody else, but I do get a lot of taps on my shoulder every 5 minutes saying, do you have a minute? Which irritates me quite a lot because I'm trying to do something, but yeah, that happens quite a lot.
Just 2 more questions before we move to the, to some fitness challenge and the real challenge. You've given a guidance that the business for the quarter gone by has slowed down, but you've also indicated to us that green shoots are now visible. Does that mean that the chart what you've given us in terms of reaching to profitability for your core business will be achieved early?
I don't know. I mean, we're trying.
You're the only one who knows.
I mean, even if I'm the only one who knows, I would not be the one who says that. But I mean, see, we are always trying our best all the time. Right? So, and maybe we'll get there. And we got to profit last month. I don't know whether this quarter will turn out to be profit or not. And so whenever we give any timelines, it's sort of always the worst case scenario for us, right? Okay. So, I don't want to miss any deadline or guidance that we've ever given.
So can I say the mantra for you at Zomato is that under-commit and over-deliver?
Absolutely.
Okay. And when you say that you are confident about growth and it could be a multi-year, multi-level growth, you're being conservative?
I think so.
Okay. My next question perhaps is about what should 10 years back, I'm going to take the clock back before I take it forward. 10, 15 years ago, if one invested in stocks like HUL, ITC, Nestle, you pretty much have been part of the great India consumption. So what is Zomato? A technology company, a brand, a consumer company, or perhaps a company which will continue to experiment, continue to deliver, and continue to add new formats?
I think we're actually all 3 of these things, right? Because technology helps us scale. Brand also keeps us top of mind, and it also makes sure that our marketing costs are low. And the consumer story sort of makes sure that we ride the wave of India's growth. So it's a combination of all 3.
Historians have divided world in 2 parts, AC and AD and BC. So let me divide my next question in a similar manner. Dipinder Goyal before the company went public and after the company went public. What has changed for you?
I think I went through a phase of trying to discover whether there needs to be a new me.
Okay.
I figured that, and I went through a bad phase, like ups and downs, but eventually I recognized that I was fine the way I used to be, and I need to bring the same level of energy, commitment, and drive back in. I don't need to be reacting to what other people ask of me, right? So,
but Zomato, gets a lot of attention. It attracts a lot of extra attention, if I may use the word. How do you keep yourself calm when a mem reaches you, when a shareholder writes an email to you, when a retail investor says, "Arey, 140 ka stock 50 rupees ho gaya." How do you keep yourself calm?
I think we're just like so used to it now. So, I mean, if we started losing our shit over any of these things, like we would not be able to hold it together, right?
So Zomato is growing. Zomato will grow. The best is yet to come, and you will be conscious of your employees, and you will take care of shareholders.
Fingers crossed.
Fingers crossed. All right. Fingers crossed, and fingers crossed for this next fitness challenge. Well, I'm 45.
40,
You're 40 plus.
40, yeah.
So it's going to be a test of old man versus a young man.
Both old men.
You know what caught my attention when I was on the other floor is this lovely poster which has been defined, which is designed by you. The 3 P's: performance, possibility, and paranoia. So Zomato की performance की तो बात हो गई. Now it's about the fitness performance, and that is what we would be testing.
Okay.
Okay. But
Let's
in
do
general,
that.
if you have to talk about performance, are you more than happy with the performance of how things are moving for, let's say, the new businesses which you've incubated? The 10-minute delivery, for example, did not work, but now it is home cooked food, food from different cities. Are you happy with these new businesses which you're incubating?
I think the cost of all these new things is pretty low.
What is the average cost which you commit?
I mean, it's the lowest. It's actually small team, a couple of locations, so it doesn't really move the needle for us overall in terms of cost. And we have to keep trying new things to understand where the market is going, how the culture of the country is shifting. If we don't try new things, we'll never learn. Yeah, I think these businesses have to grow, evolve, change, adapt. And Zomato also was a reviews and listings business earlier. It actually has become what it has become right now. So I think we need to continue learning and growing and changing. So
now let's talk about possibility. Like you said that you never expected that Zomato would become a 5,000 employee company, and it in a sense will become listed. It was almost like a garage startup idea which got incubated on your work desk. Do you think there is a possibility that in 5, 6, 7, 8 years Zomato could be $100 billion company?
I hope so, and surprised. I'm actually surprised why you're saying this, because internally that's what we actually aspire for. Internally that's the goal, that by 2030-ish we should be about 100-ish billion, right? And I mean, the way we see the business growing and changing in terms of scale and profit, I think we can easily be $1 billion plus in profit in 7-8 years time. But who knows? Like, it's fingers crossed again. So.
Yeah. But for the entire architecture to work, you also need a team. And a lot of yes and no has actually happened with the recent exits. Founders are exiting. 4 key team members after public, they've gone different ways. Why is that?
I think, so first of all, there is nothing wrong with people leaving the organization anyway, right? So I think, I mean, people come in for 5 years, 10 years. We have about 175 people who have spent more than 8 years. So we don't have a attrition problem inside the organization. Now, see, different people leave for different things. Sometimes they have to spend more time with the kids, right? Sometimes they want to do different things. Sometimes they're done with active work life. They want to spend less time at work. Sometimes I would raise the bar on someone and they fail to get there. So many things happen. Outside of the timing issue, which was 3-4 people in 3-4 months, it's all normal here. And the timing issue, I think, happened because of the IPO, right? So IPO was a big thing, and it changed a lot of people's lives. So a lot of people's personal lives changed, a lot of people's mindsets changed, ambitions, hunger, so many things changed, their form changed. And yeah, that was it. And then suddenly we're okay, let's just usher ourselves into the next phase, and let the old make way for the new.
So we've discussed the 2 P's. Possibility and performance. Performance पे तो आएंगे अभी. अब last पे है paranoia. What are you paranoid about?
I am paranoid about failing, right? About our customers not liking us, about us not making money, about us not growing, about our partners not actually seeing the kind of effort that we put in and seeing the benefit of the effort that we put in. I think just these things. I'm just paranoid about things not working the way they should in terms of quality as well as speed.
So 2 more questions. What are you doing to increase the reach and the moat of your company?
I think the quality of service that we have is one of the biggest moats, right? And we have very little orders which are actually delayed, right? So our customer earlier, like I think 4% of orders used to get a customer support call. It's 0.225 odd percent right now, right? So there are very few things which go wrong with the service right now. So it's basically the quality and consistency of the service which is the moat, and it takes years to build. It's not an overnight thing. It's little by little, like you tune hundreds of thousands of things to get here.
So what is that one biggest constant customer complaint जो आपको मिलती है? आप कैसे solve करोगे उसको? You're in a food business, so you know customers will always have the viewpoint.
Customers, I think the quality of food or the taste of food is something which we can't solve, right? Because we don't actually control that aspect of life. But with a tighter ratings, the ratings that you see for restaurants, I mean, we are able to solve for most part. I mean, customers know that if they're ordering from a 2.5 rated place, they can't expect high quality food. But if they're ordering from a 4.5 rated place, then they can and like really expect high quality food. So rating system solves that, but we still get a lot of, hey, this food is not good, right? So but we can't do much about that.
So what's the first thing you do when you get up in the morning, and what's the last thing you do before you go to bed?
The last thing before I go to bed is actually fairly the same thing. That's why I know what do I do. I have to shut my brain off, right? Otherwise I can't sleep. So I would read a very boring comic or a novel.
Chacha Chaudhary?
That's not boring. Like that's a lot of fun, but like super boring stuff, and which actually like shuts my brain off and puts me to sleep. In the morning. I would just wake up to coffee. Like I'd not look at my phone for the first 15-ish minutes.
तो कभी स्विगी से खाना ऑर्डर करा?
बहुत बार.
How is the service?
I don't know.
If you have to give one advice to the Swiggy management to change something about the customer
I don't
experience,
want to talk about it. I don't want to talk about it.
चलिए अब करते हैं the performance part. And we're talking about push-ups or we're talking about squats or both.
Anything. Plank करते हैं.
चलिए plank करते हैं.
How long will you do?
आपसे कम करूंगा. उम्र का तकाजा है. पुशअप्स में थोड़ा ट्राई करते हैं.
पुशअप.
चलिए दोनों करते हैं. दोनों करते हैं. चलो.
पुशअप मैंने आज तक नहीं किया.
नहीं.
I've never done push-up. Let's try.
ट्राई करते हैं.
Let's try.
भाई Zomato में एक्सपेरिमेंट तो रोज ही होता है.
हाँ ठीक है.
This is one of the experiments. Fitness business में आप नहीं हैं, तो maybe this gives you an idea.
No, we are. We invested in Cult.
Oh yeah, that's important. Yes. चलिए. 1,
Ready?
2, 3. चलो start. अरे जोर लगा के हरिया. जितनी उम्र है उतनी पुशअप. चलो जी. Batch 1 use.
Back with first trades right here on ET. Now let's just revisit what the first trades have settled in at, and after that 0.5% downtick and even breaching that 17,400 mark, we're not seeing any improvement. In fact, we're only dragging lower and pretty much trailing around the low point of the day. 120 points lower now for the Nifty spot as we speak. Z, by the way, has cracked 9%. Bring up that intraday graph up for you. That's quite a bit of sharp downtick, and the fall has come in just the last few minutes or so. There's PVR as well, lower by 4.5%. Bajaj Auto is down 3.6%. Adani Enterprises has fallen more, it's down 4% as well. And Emphasis, so mid-cap IT sporadically, is also seeing some weakness after gains coming in all of last week. The breadth of the market is very bad, and I think that is the big niggling worry. 165 stocks are standing to the reds, but just 25 to the ups when it comes to the F&O universe. But let's move on and let's talk about what's happening with Keynes Technology. What's the outlook on capacity addition, margin roadmap? Let's try and understand with all about it with Ramesh Kannan. He's the MD at Keynes, joining in on the show right now. Ramesh, hi, morning. Great to have you on the show. Tell me how the demand and the order inflows have been across your underlying sectors. Considering that Q4 is a strong quarter, and also what then is going to be the outlook in terms of high-growing segments in the next 2 years?
If you see in our electronic manufacturing service business, FY23 has been very good. More than 55% growth we have already clocked in. Profitability also has improved. Business verticals, if you see, I am able to see very steep growth in the industrial, automobile and EV. Thereafter, railways also there is good increase. Medical, aerospace and defense is something which is going very slow, but I'm sure and certain in the days to come and it is picking up.
Whom would you say in India is your nearest competitor, and what is your edge over your nearest competitor?
If you look at it, we do not have a competitor who are vertical-wise strong like us, but we have 3-4 players in each vertical. If you see, we have a listed company called SDS Sirma. We have a company called SFO in medical, like that. There are, for each verticals, we are a company with 5 strong verticals.
So why are your margins the best? And I was looking at margins of even, SGS Sharma. It's a listed company, so we have access to the margin. If I compare your margins versus their margin, you both are in almost the same business, but their margins are way below yours. Why is that?
I am unable to comment on theirs, but what I can tell you is we have a combination of it's a combination of auto, defense, railways, aerospace, and medical. So all put together, where the low volume, high tech, high mix is there. And this is what brings the extra margin. Our type of business where multiple changeovers are there, multiple values are there. So if you look at the comparison, you have to look at comparisons of companies of our type, which we do not have in that circle. We have no verticals more than 34. Our highest is 34, 35, which is auto. Then you have industrial, then we have railways, aerospace, no consumer electronics at all. In consumer, what's happened, it's a volume game. And that is where the margins are pulled down. I hope I have answered this.
What about the order execution rate? And of the total order book, which stands at 2,500 crore rupees, when will the orders flow into revenues and add on to your books?
See, for the next year order of around 1,700, 1,800 crores, we have 90+% of order confirmedly booked out of this 2,500. And for the coming years, orders have started coming in. Since we are a low volume, high tech, high mix company, we need orders visibility at least for 2 to 3 years, and which we are seeing.
You had also highlighted in your conference call in Q3 that you're in advanced stage of discussion with potential customers in China and Europe to close a large deal. What's the update on that front and how are things progressing? Can you share any details?
Things are progressing very good. Against China, what we need to do is we need to look at import substitutes. We need to look at more consumption in domestic, and then China replacement by global players. We are in talk with 1 or 2 players for this last, what I mentioned, China replacement. And I am very certain that one will come in. we should know in by first quarter of our first audits are over. Our type of business, acquisition takes almost 24 months, execution takes another 12 months, and thereafter only billing starts. So these are for the future.
So I'm going to put a time frame here. We are in 2023. Hypothetically, if we are having a similar conversation in 2028, that's 5 years, what kind of projected top line do you think we could be discussing? Today we are talking about a company. Yes, please.
I already mentioned in my last call, if you remember, we will be $1 billion plus. We have put our factory, we have done all arrangements for meeting this $1 billion plus. In fact, our company has embarked on new partnerships in technology front also to take this company to $1 billion plus, which is very, very important.
What a maths, and if I do a backward number, your FY23 number versus what you're telling us in 2028, you're looking at a growth of 20% plus on a CAGR basis for next 4 to 5 years. That's how maths works out.
You are right.
Okay.
And in our electronics business, what has happened is, one is the growth in the business. Second is more and more electromechanical and sensing technologies are getting converted into electronics. And that is where we are going to grow.
If I look at your revenue breakup, 38% is automotive. Large part is coming from railways. Walk us through these two verticals, because railways is dominated by government, automotive is dominated by private sector. Very different verticals.
Automotive, if you see, more and more EV growth is there. So more and more electronics is coming in. If you look at it, more and more global players are coming into India for getting the sub-assemblies manufactured. And I see 3 years back what was electromechanical or what was only a sensing is now getting into computing as well as getting into electronics. So more and more electronics coming on each vehicle. When it comes to railway, we are in the signaling business. We are also in the traction business. In signaling business, I find there is a big growth in India because a lot of infrastructure is coming in, and I am sure and certain, and that is where our growth is happening. Government spending is increasing on safety grounds, and that is where signaling and high-speed vehicles are also coming in. So this current signaling will not work for that. My customers are giving us newer opportunities to get into the next level of signaling.
Do you think you can take your margins closer to 20% as operating leverage kicks in, or it's going to be a difficult one? I mean, as progressively.
It will be only at 15 plus.
Okay, so
it cannot be 20.
So if I have to construct the next 4 to 5 year kind of a big picture for Kaynes Technology, what you're sharing with us is that you see a definite growth of 20% plus for next 4 to 5 years on a CAGR basis, and you think margins will be between 13 to 15%. They're not going to go lower, they may not go higher, but they will remain in a 13 to 15% band.
You are right, your inference is right, because we are able to clearly see a 3 years visibility, and from there onwards we are started working towards customers coming into larger size. So that is where my $1 billion dream will come true.
This optimism, I mean, with all due respect, that business environment is uncertain, could remain uncertain, and could turn even more uncertain. What looks like clear right now could be foggy. What is the biggest impediment? What could challenge your optimism?
It is a political turmoil should not happen. Geopolitics should not play in. Otherwise, I think because we are in a space where more growth is happening. We are in a space where more automation is happening, more computing is getting in. So since we are in that space, I feel no other challenge can happen. Plus, internally to grow, I keep telling my team, for us to grow, we need to do the work. Whereas our neighboring countries like Malaysia or Indonesia or Thailand, they could grow. They had already infrastructures, technologies, and some favoring rules with them. So in our case, we need to do that marketing side.
Thank you for joining in, Mr. Kannan, and giving us a view on how business is shaping up. But the markets merit attention right now because we're down 140 points around the 17,300 mark on the index, close to the day's low. In fact, you've got the Sensex, which is on the brink of breaching and has already breached the 59K mark. The broader markets are seeing an underperformance. It's a cut of already over 1%. The pain points include IT, metals, auto, as well as the media sector, by the way, which has shaved off about 3.5%. All sectors barring real estate are in the red. And when we're taking a look at the list of Nifty losers, names like HUL, Eicher Motors are all trading below their 200 daily moving average. Bajaj Auto is down 4%. Adani Enterprises, TCS, JSW Steel, as well as the likes of Wipro, M&M and Tata Steel are under pressure. While within the broader universe as well, you've got stocks like Uflex seeing a double-digit cut. Z Entertainment really putting a lot of pressure on the entire media index. Mahindra, CIE, BEML, Adani Enterprises, along with the entire cluster of Adani Group stocks, as well as PVR. Those are some of the stocks under pressure. But let's focus on the macros then, and on the sidelines of the G20 meet in Bengaluru, the IMF chief, Kristalina Georgieva, tells the Economic Times that a recession is unlikely in 2023. She adds that India does remain in a bright spot on the back of the reforms push and sustained growth. Here's an excerpt of that conversation.
We focus on reforms that we have seen over the last years. With very, very dramatic, very important systemic reforms, especially on the tax harmonization side, on the way India pursues digitalization, that has played a huge role for India. India is offering the world a concept of using public digital infrastructure as a foundation for both public services to improve and private sector to blossom. We are very keen to use our engagement during the G20 presidency for sharing these lessons from India. And I'm very encouraged to hear Prime Minister Modi not wanting to stop here, but to go further, especially in using the talent of women in India. We know that India's growth can go higher if women participate more fully in the economy, and all the steps that are taken in this direction are really excellent. First, resilient labor markets and consumers in the US and in Europe. Second, very rapid action in the European countries to free themselves from dependency on Russian oil and gas that allows their economies to move up. And three, China reopening, making China again a contributor to global growth. We also see signs that inflation may be finally going in the right direction, in other words, down. So we have, on one side, still the concern that growth this year is decelerating. It is slowing down further. And last year, it wasn't very high to begin with, 3.4% 22. Now we predict 2.9 for 23. But some signs that growth is bottoming out and inflation is trimming down.
Okay, that's an exclusive voice coming in, and another exclusive interview to ET. Veteran banker KV Kamath believes that inflation in India is well managed, and even as global recovery hasn't happened as per expectations, he isn't worried about India's financial system at all. In an exclusive chat with my colleague Ajay Sharma, Kamath also emphasized on the need to replace EBITDA as a metric to analyze financial strength and replace it by free cash flows.
Again, there is a whole lot of things that has happened over the last 1 year. Whether they can come out of it is uncertain. So commentary as of today is uncertain. So I would think the shining star in a sizable measure is only our country. And if we can keep particularly the exchange rate under check, I think we have a runway which is absolutely, I don't see any challenges going forward. Growth per se, I don't see a challenge. So where is growth impaired? let us look at that, which I think is at the base of all, should be at the base of all dialogue. First is, do you have demand for product? I would think that Amritkal, 25 years, we have more than enough demand for infrastructure itself, which can transform this country and provide that growth momentum, employment, consumption, et al. Cities have to be rebuilt, roads have to be built, ports have to be built. You can go endless. Then manufacturing to support aspirations, because if underlying growth happens, then aspirations rise, which we are seeing today, and we have been seeing for the last 2 years. Third is, of course, agriculture, I think, is running steady. We are still dependent on monsoon, so there will be ups and downs, but running steady. But other piece which I don't see any economist having really applied his mind is digital India. The transformation that digital India is having on people's lives in villages. I'm not talking of urban. Urban, it is visible to you and me. But what is happening to people in urban India, rural India, given device affordability, given data affordability, virtually they are using it as an extension of themselves in rural India, as in urban India. And this provides digital India a tremendous opportunity to grow. But almost everything that we are doing has to be reimagined, including financial services. But I think that that is happening at a very rapid pace. And so we won't lack for growth. So if I were to break down growth in the future, I don't know every component, digital India should move, in my view, in the next 5 years from 5% to say 20% of the GDP. And I don't think we have factored that in as yet. So if you are saying our growth is going to be 6 to 7%, I would say please add 20 to 25% to that, which will come from digital India.
Which we are not, we are underestimating.
Which are as of now not understanding the power of this. But we are seeing it happen, but we are not able to capture what impact this will have on the people at the bottom of the pyramid and coming up the pyramid.
Right. Okay, I'll come to that. I understand that you are working on a project in that side on how to really take the help of digital India and financial services disruption and put it together into something which may not have happened so far. But I want to talk to you a little bit about banking sector. I remember one of our ET Now programs from three years back. You had said that I've never seen the bank's balance sheet so strong and healthy in my entire career. And they had almost 50% rise in Bank Nifty after that. The market realized that how great the banks were. Now the sense is coming that the peak of profitability of the Indian banking sector may have been hit already, and margins will come under pressure, all of that. Credit growth is around 18%. What are your thoughts on growth and the outlook on the sector?
Banks will continue to be I would say, provide the bulk of the support for growth. There is no question about that. But 3 changes will happen in the banking system. One is digital. So almost everything will have to move to digital. A lot of banks, so most of them are moving at very rapid pace. We'll have to see the interface of the neobanks, the digital banking system on this. We will have to see it as we go along. But more importantly, banks will need to realize the second point, that the period when they had low cost funds, they could lend at high rates, margins and NIMs looking good, are over.
Okay.
So where will gains come from? Well, whatever you have in terms of deposit growth will provide you your feedstock, as it were. My own assumption is deposit growth will be actually sharply moderated. It is already moderating because insurance and asset management is growing at twice the rate.
Sure.
So it is already moderating. So you will have to look at how you moderate lending. Margins, NIMs will come under pressure because your lending rate will have now a ceiling in terms of how much you could do. Whereas your borrowing costs are going up. So where do you get efficiency? By moving digital. So banks per se will have to move to a digital environment to cut your operating expenses and the cost to income ratio to maintain your profitability. However, the good news is the credit quality continues to be good. The cleanup of the last 5 years, I think, will hold. And credit cycles, I do not think will morph that easily because there is a lesson that is learned, including at Retail India. There is talk that Retail India will perform. I think Retail India will perform because there are so many metrics now going into analytics that it's not a problem.
Sir, I also wanted to ask you about the banking credit growth, 18%. Do you expect it to hover around or taper it down a little bit?
I think it is, my assessment, it's lower than that just now. and that credit growth will not be in those numbers.
Okay, sure.
My number was it is low teens.
Low teens. Is it? Sir, let's talk about the financial services sector now. In terms of financial products, we have seen number of demat accounts going a record through the roof in our country. We saw SIPs going almost record high every month. It appears that people are, for a variety of factors, are really moving towards financial assets. What are the trends you are observing there?
See, yes, indeed there is a move towards financial assets. There is no question about it. As I said, it moved from land and gold to banks, and now it's going into hard financial assets. The reason that is driving it is to be understood, and it's very clear to me. Again, there are 2 or 3 underlying things which are pushing this. The first is, I think the saver is looking for higher yield. The banks were not providing that yield, so he's moving away. And the banks are in a catch-22 situation. They have a challenge. Whereas other products are providing higher yield, whether it is debt instruments or equity instruments. The reason why we see the number increase, and I think it will continue to increase, is the ease of dealing with these products today. Compared to 5 years back, when you had to physically deal with an instrument, today you are digitally dealing with the instrument. And the entry of new players into this space who are completely digital, as opposed to banks which are still physical and digital, largely they are also moving, but here it is visible. It is basically a digital move. I think is what you're seeing in terms of growth in opening of accounts, and B, the SIP growth as we see. And I think it will continue. It will only accelerate.
So we have, say, around 11.5 crore demat accounts and say around 4 crore individual folio numbers. In the next 5-7 years, you see huge growth there.
I would look at this sector growing at 20%. So in 5 years, you say it will be 1.5 times, 2.5 times where it is. So it will double in 4 years. It will double.
Okay.
And the 5th year, it should then give another 25% growth.
But the way overall Indian banking system is underwriting risk right now, conducting the exercise of lending, and the frailty of banking system, which was say 1.5 decade back, that doesn't exist anymore.
I can endorse it. It doesn't exist. You see, and I'll give a thing to it. The structure of lending 10-15 years back was on a particular basis. If I go back 20 years back, was on the basis of an India where there was nothing and we had to build. So we said debt equity ratio will be 1:2, 2:1, 2 debt and 1 equity. And every project would have that, because that's how India grew from 1950 to almost 2000. Then it became in terms of, it's not a sacrosanct ratio. It can be a higher ratio or a tighter ratio depending on cash flow. So it changed. And I think there have been a lot of learnings in the last 10 years. What is the primary learning? If I look at post-opening and post 15 years last year, that there are risks which are, not measurable a priori. So you need to make sure those risks are what we call implementation risks. It could be land acquisition, it could be mining rights, it could be spectrum rights, it could be a variety of these things. Access through an area which is environmentally fragile. All these we did not know in the past. And when suddenly these were brought to the fore, as the project was being implemented, a lot of projects got hurt. And I'm looking at real reason why a number of projects have failed. Now, all those learnings are with us, and I cannot see any banker now making that mistake again.
Once again,
they are documenting each and every risk very clearly and making sure that those are addressed before you go ahead. So I'm not worried about the Indian system at all.
So one last question, because we are meeting on the occasion of the Investment Advisors Forum. What kind of innovation do you see happening, or disruption do you see happening in the world of financial markets for retail, HNI, all that kind of market? So I got very excited about markets.
See, again, you touched upon it. The saver is now going into products which earlier on he or she was not going into. And as the ability to save increases, the need for advice also increases.
Yes.
And I think ARIA provides a service which is much needed. And in the West, this is the route to creating wealth. So this saver today, you quoted the growth in demat accounts and the growth in SIPs and dealing, as it were. And not necessarily day traders, I'm not talking about that segment. I would think anybody who's not a day trader needs the service of And I am sure some an institution of players like members of ARIA, and I think that number has to grow tremendously, because that number otherwise is a very small number to serve this vast population and the vast number of opening of accounts. So I think not only is the outlook good, I think there are more players needed in the system to handhold the lay investor.